and welcome to our first in our series of financial accounting. Alright, so we're going to talk about accounting, and the two objectives we have today is the use of accounting and financial statements. Alright, so when you hear about accounting, most persons want to find out about the accounting equation, right? And the accounting equation says that assets equal liabilities plus owner's equity. Alright, so we have a scenario to bring out what the accounting equation is. Alright, so we have a farmer, because back in the day before accounting was popular, there were farmers and persons who just wanted to sell their goods or whatever they had. So this farmer, he raised some cows, and the main thing that cow produce is milk, which would be that farmer's resource, right? So say he had the cows, he had the resources, and he wanted to sell it to the market. So he didn't have a lot of money or capital to start off. So then now, to get rid of the resources, he would need to get some help from someone. And whenever he sells off that portion of milk, then he would pay them back, which is a promise to repay them back in the future. And these are called liabilities. Alright? So persons who assist the farmer in financing is liabilities. So say that same farmer, after realizing that he can't just every day sell his milk to pay back persons who just finance him, right? So he decided to start a business, to set up, whether it is a business to sell his milk or to produce something from his milk, right? So what the person would be, rather than being someone who finance him, they would become an investor. Then they would have set up a business, and they would have become part of the business, so they can become an owner of the business rather than a promise for repayment. So that's where we have the owner's equity, and these are investors who provide capital and invest in stocks in the business. And the common stock, we just use it as common stock, which is the external ownership of the business. So for this farmer now, if he go to the market and he was able to sell off all the milk, right? So what he would do, he would pay off those financiers who assisted him in getting his assets sold, or assets or his resources sold. Then now the person who is the investor, they would not only reap from the interest that the farmer got, but they would also benefit from the profit, right? So after they repaid their investors, the share that they have for the profit would go to the persons who are the investors, and that would be a larger sum. And that is where the assets equal liabilities plus owner equity equation came from. Alright, so join us next time for our upcoming video where we'll look on them in details.